All right, welcome back inside our proactive newsroom. And joining me now is the joint managing partners of Cordiant Digital Infrastructure, Stephen Marshall and Ben Mikula. And gentlemen, thank you very much for being here. Good to see you both.
Hello, Steve. Thanks very much for
See
having
you,
us.
Steve.
Yeah, good stuff. And also joining us is your Chief Financial Officer, Mark Tyner. And Mark, nice to see you as well.
Good to see you again, Steve.
Yeah. Ben, Mark, we'll get you in just a second. But Stephen, why don't we start with you talking about your financial results? And that'd be a good opportunity to give us a bit of an overall look at what you're seeing. I imagine you're pretty happy.
Yeah, no, absolutely. Thanks very much, Steve. These are absolutely exceptional results, having outperformed the mandate that which we set with shareholders 3 years ago. Then we were looking to achieve a 9% growth in our NAV on an annual basis, made up of cash and growth. We've actually achieved in this last 12 months 9.3% growth in the NAV, which would take our NAV up to just over 120 pence per share. We've also increased our dividend slightly to give with a 5% increase to increase our dividend to a 2.2 final dividend, which gives a 4.2% dividend throughout for the whole of the year, and that's well covered both by EBITDA and by AFFO per share. So, with that, maybe we'd like to hand over to Mark.
Yeah, Mark, you're the numbers guy. So Stephen gave a few of the numbers, but obviously you look at just about everything down to the nickel. So tell me a little bit about what you're seeing within the numbers.
Yes, we're very pleased with the return, 9.3%, notwithstanding a little bit of a headwind through the year from adverse foreign exchange. If that hadn't been there, we would have been showing a total return of 11%. Of the 9.3%, the key drivers really is performance at our portfolio level. So during the year, the aggregate EBITDA of the portfolio on a like-for-like basis grew 7.2%, which we're very pleased with. And as Steve mentioned, our increased dividend, 4.2p for the full year, is now covered 1.6 times by AFFO. That's adjusted funds from operations. That really, again, shows a strong EBITDA growth that we've seen in the year.
Yeah. Ben, can you talk a bit about sort of the strategy of the company? And Stephen mentioned at the beginning this sort of plan you've been on for a while now, and it continues to be at a point where you feel like the core strategy of the company is really starting to show the successes in these years coming.
Yes, indeed. 3 years ago, what we set out to do was to offer investors exposure to a diversified portfolio of digital infrastructure, by which we mean fiber optic cables, backbone fiber optic cables, data centers and communications towers, in essence, the critical infrastructure that enables the digital economy. These tend to be assets that are long-lived, they have blue-chip customers, and what we sought to do was to purchase platforms that we could not only run profitably, but also expand in size, in scale, and in profitability. And we've done that, having assembled thousands of kilometers of fiber, thousands of communications towers, and a diversified portfolio of edge and interconnect data centers across North America and Europe. What this means, too, is that we are able to give investors exposure to the growth that this very exciting sector of the economy offers. But we've done so at quite a conservative multiple. You can very easily find on the stock exchange pure play names that are trading at 20 times EBITDA or more, and we're less than half that. So we're offering both diversification and growth on the one side and attractive valuation on the other. So we'd like to see the latter end through a rising share price as the multiple gap between ourselves and comparable companies such as Cellnex closes. But the strategic positioning of the company is exactly where we hoped it would be. And as I'm sure Steve can talk about, the performance of the companies and the boards he leads are doing rather well, to say the least.
Yeah, it's a good place to end, Stephen, is in just that, as those companies are showing some success, and that's obviously to do with you and the team as well, but also the work that they're doing as well. It's a good news story all around, it sounds like.
Steve, we are very fortunate to have really exceptional management teams across our three primary assets. in CRA in the Czech Republic, in Emitel in Poland, and Speed Fiber Group in Ireland. Really exceptional management teams, and you see this come through with both the growth of revenues from existing customers that are taking on more and more asset requirements and service requirements. You see it with these management teams thinking about bolt-on acquisitions like C4C, where we've acquired and now become the biggest cloud provider in the Czech Republic, which sort of augments our existing data center capabilities, and acquired another data center down in the southeast of the country, close to the Austria border. We've seen it with the acquisition of towers from American Tower in Poland, in Emitel, and we see continued bolt-on opportunities, growth opportunities in the Irish Republic. So I'm absolutely delighted with the management teams and the way that they look at both this year, the next couple of years, and the 5-year sort of strategic approach to business. We're very well served. We've shown really great results over the last 3 years, and I expect that to continue well into the future.
And Steve,
Well,
if I might just tease out
Yeah.
one very relevant point that Steve mentioned. At CRA, when we purchased the company, there was a very small data center and cloud business. The company overall has grown, but cloud and data centers now account for almost a fifth of the company's revenues, and they're growing fast. We've built an entirely new business there, something that we're very proud of, and that the management team there should also be proud of.
Yeah, and no doubt, as everyone knows, cloud is only growing. There's the need for it in the future is going to continue to accelerate for sure. Gentlemen, thank you so much. Really great to see all three of you. Congratulations on the plan. I remember the first time that we all chatted, and you had set out what your goals were, and a lot of those have been achieved. So and still more to come. So first off, Mark, great to see you. Congratulations on being able to put all these numbers together.
See you, Steve.
Yeah, and gentlemen, Ben and Stephen, thank you so much. Good to see you both as well again.
Thanks very much.
For your time. Take care.
All right, good stuff. There's Mark Tyner, the Chief Financial Officer, and Stephen Marshall and Ben Mikula. They are the joint managing partners of Chordient Digital Infrastructure.